So we are going to present some content tonight, you guys. So the first thing that I want to do is I want to show you, Najla mentioned the income calculator. I actually want to show you guys real quickly. I want to demo demonstrate what it looks like. And okay, can you see it?
Yes.
Yes, okay. So basically when you open it up, it's an Excel spreadsheet. And you cannot break this. So there's nothing that you can do wrong because all the cells are protected. But basically what this does is it's an income calculator worksheet. And this green area I talked about last week, you know, like in TurboTax, whenever you're doing your taxes and up at the top, it shows you what you owe or what your refund is. This spreadsheet works the same way. So you can go in and plug data down here, and you can watch your monthly income change as you play around with different numbers. So the first thing that you do is you go in and you just plug in the numbers that are current for you. So what's your quality rating? So in the pink boxes, those are the only areas that you enter your data. So let's say you're a quality rating of 2. Then you go down and you put in what your weekly rate is for full-time care for these different age categories. We've gone ahead and just populated these, but you can go in and change these numbers. 400 a week for 0 to 18. I mean, that's not going to be what your number is, but you can overwrite these numbers, but we've just put them in so you can see what it looks like here. And then you're going to do the same thing for part-time care. So 0 to 18 months. And if it's all the same, you guys, then you just go in and do 75, 75, etc. So you can overwrite these cells. So these are your rates. This is where you enter the data for your enrollment. So for each column, so each child has its own column. So if you have 5 children, you're going to be filling in 1, 2, 3, 4, 5 columns. So, but you just put one number in per column. So child number 1, a baby, let's say a 6-month-old, and she's full-time. So you'll just enter a 1 here. And then you scroll down, you don't enter anything in part-time. And then you come down, and this is the area where you're going to enter whether they're in CCAP or not. You have to enter a 1 for yes or a 2 for no. So this is a mandatory cell. And let's say that this child is not in CCAP. So you'll enter a 2, and boom. This child, you'll be earning $1,600 a month with the data that you've entered. And let's just say there's a place that you can enter the food program. So let's say that this baby is in the food program. So you can put in a 1 for yes. If they're not in the food program, just leave it blank. But let's say that they are, boom. And you can see your monthly income change for whether they're in CCAP or not, the rates that you change, etc. And if you scroll down here, this is the area where all of those numbers are being calculated from. So below the green, you can go and look. But what's really cool, and so you go in and let's just look at child number 2. Let's say that that is a toddler, 18 to 24 months, but they're in part-time care. So you'll enter a 1 here for this in the second column. If they're in part-time, you have to enter the average number of days per month. So let's say that it's 3 days a week, which would be 12 days a month. So you'd enter a 12 here. And let's just say that they are in CCAP. So in that case, you'd enter a 1, and boom, that's what you're earning based on these 2 children that are in your care with these different kinds of structures, a full-time and a part-time. And again, you can go down and you can say, yeah, they're in, or let's put them in tier 2. And that's what your income looks like. So this is, you guys can go in and enter all your kids, and what I'd suggest you do is you do it first with what you currently have. But the really cool thing, you guys, is you can go in and say, you know what, I wonder what my income would look like if I had a 3-star rating. So you just change that to a 3. Well, let's change it to a 4. And you can see your income go up a little bit. It's not that, it's not that much for the particular data that's been entered, but you can also go in and look at what, if you change your rates, you can go in and plug numbers. Now, the one that we had was a 18 to 24 month old for part-time. Let's just change that to $90. Or wait, was that it? And you can see your numbers change here by going in and changing the different rates. And actually the reason that didn't change was that child was in CCAP. So if that part-time child was not in CCAP, then you can go up and change your rates here and watch your income change. So it's just a way of being able to play around with different variables that can impact your bottom line. So you can, yeah.
So down on the CCAP column, right
here.
Yes. And when it says yes, that the child is on CCAP, is it calculate? Does it know the amount that the rate is for that particular age?
Yeah, so if you scroll down here, and this is all, I've actually hidden the area, but we have built those rates into the spreadsheet.
Oh, okay.
So you can't see those CCAP rates. Actually what I can do, it's protected, but it's hidden in this area, and it's Adams County CCAP rates, by the way. So if you're in another county, then these rates will be off, maybe off a tiny bit, but it's still, it'll be close.
Yeah, I guess that's one reason that Brother Shine rating is mentioned, because based on that, your pay changes, right?
Yeah, yeah. So so if you have, like, you can go in and just say, I want to recruit, see if I can get 3 new children in CCAP, and you can go in and you can then take a look at your Colorado Shines ratings and how that's going to make a difference in your bottom line.
So are those rates monthly? We're supposed to put the monthly rate or weekly rate, or what is this rate?
So what we did is we did a weekly rate for full-time care. So if you have a monthly rate, you'll just divide it by 4.
Okay.
And then for part-time, it's daily. So you may need to do a little math to make this work, but it's gonna all add up to your monthly income.
Okay, I didn't see the weekly before. I just the rest. Okay.
Yeah. So I would encourage you guys to play around with this, and we have until the end of the course for us to go in and make some, really play around with this, because it's a really great tool for you guys to take a look at how your bottom line might be impacted by making a little tweak here and there in rates or CCAP or food program. So we're going to upload that again, email it to you again this week. You've already been sent it, but we'll send it again. And we just encourage you guys to play around with it. So we're already over. Sorry, Dawn, I'm going to shut up and turn it over to you.
It's all good. So we're just going to very briefly touch on on expenses, you guys. So this is a new spreadsheet that you're going to get this week, that you're going to be able to look at your expenditures. Remember the leaky bucket that Angela talked about, right? Where are some of your leaks? So if you're keeping track of all of your expenses, it's going to help you to really detect where am I losing some revenue that I can recuperate. And so on this sheet, all of the ones that are marked yellow are actually going to be where your time space percentage can be applied to. And then down here as you go through, because there's medical, there's loans, there's all kind, gifts. Gifts in childcare could be 100% deductible. So maybe you take this and add down by business gifts there, right? I know that I always used to give gifts to my kids when it was their birthdays or holidays, that sort of thing. I want you to think about, as we look at these business expenses, so educational materials, I don't know if you're purchasing a curriculum, but if you do purchase a curriculum, go to their website and look and evaluate, like, are you paying a monthly fee for them? Because if you are, if you plan and budget for it, next year you could pay once in the year and save yourself 10 or 20%, which is more money you get to put in your pocket, right? If you are buying milk at King Soopers, buying 2 gallons of milk at King Soopers every week for childcare, maybe a way to save some money is to go through Sam's Club instead, or Costco, right? And buy the 2-packs there and save some money on that. So buying in bulk. Sometimes you can team up with other people and buy some things in bulk, like construction paper and that sort of thing, where you can get savings at those wholesale places and then split it up between the two of you. Just some ideas there. We also want to show you, because we're crunched on time here, time space calculator gave me fits this week too. So here's an easy way to do it. Angela is an Excel guru, like she's a master at all this. So she built this time space calculator, and same thing with the pink boxes. You just read the question and put your answer in here, and it's going to do all of the tabulating for you. Okay, so you'll receive all of this week. If you have questions about expenses or different items, because look over this week and see and make sure you're counting all of those numbers in that you're getting deductions for all of these things that are marked, okay? And we're gonna have 2 great speakers tonight that are gonna go more in depth into some of this, and we'll help you any way you need throughout the week.
Awesome. Thank you, Dawn. And again, we'll be revisiting this the week after Thanksgiving too, but we want to get these out to you before the holidays so you can have a chance to take a look at these different calculators. So we're actually going to take a few minutes and watch a webinar on the legal structure and the tax structure of your business. This sounds like it may not be very interesting, but it's actually one of the most important questions for you all to be asking yourself, is how your business is structured from a liability standpoint, from a tax savings standpoint. Many of you are sole proprietors. There's a reason that you became a sole proprietor. It's very easy, and there's some pros to it, but we actually want you all to get educated on the pros and the cons of the legal structure of your business. So Hannah's gonna, we're gonna have a 20-minute webinar, and then we're gonna have Lauren, who's a CPA, is gonna come on after the webinar and answer questions.
Okay, let's see if we can get this working, and then we'll do that, okay?
Personalized consultation about your specific situation before making any of those legal decisions. Similarly, I am not an accountant or a tax attorney. I'm pretty sure Scott's not an accountant or a tax attorney. And I'm pretty sure Lauren says the same thing that I say with legal advice. None of this should be considered tax advice. This is very general tax information, and you should always consult with an accountant before making any tax decisions. Lauren, is that right?
Exactly. Yep. Individual, this is just for educational purposes today, and get some individual guidance on your situation before taking any action.
Perfect. So now that we've got that out of the way, let's talk a little bit about entities. So we have, I'm not supposed to say legal on there, I'm not sure what happened to it, but in creating a company, there are your legal formations. Oh, there it is. And then there are your tax formations. So how you are legally, I'm not sure why it's doing that, but that's okay. How you are formed legally is not necessarily the same as how you are formed tax-wise. So legally, you have 4 general options as to how you can be formed: sole proprietorship, limited liability company, which are the two that we're talking about today. And then the two that we're not going to be discussing today, but that are also there, are partnerships and corporations. However, as you'll see on the tax side, the LLC doesn't come up as far as that goes. Your tax formation capabilities are under Schedule C, which is your sole proprietorship or your single member LLC, partnership, S corporation, C corporation. So when we're talking about the entity types, it's going to be a little bit different from the legal to the tax side. Lauren, anything else to add on this slide before we go into the others more specifically?
Yeah, just that really we're going to deep dive this Schedule C taxation today. So that's for sole proprietors or single member LLCs. We'll get into this a little bit more if you have an LLC with multiple members, and that would fall under a different tax structure like a partnership, S Corp, and C Corp. Be sure to watch that other video that's out there in more detail of comparing those entities.
Great. Thank you. Oh, I see what happened. Okay. So to start with, you have a sole proprietorship. And when you're considering what kind of entity you should really be considering 3 categories of things. You should be considering your formalities, meaning how much work do you have to do to keep the entity valid, to keep the entity as being considered what you're saying that it is. Should be considering the liabilities, meaning how much responsibility are you, the owners, taking on within that company, and you should consider your taxes. And these 3 things will help you determine what kind of entity you have. A sole proprietorship, legally speaking, is the easiest kind of entity. Tax speaking, it's also the easiest kind of entity. If you are selling something on Etsy, if you have a lemonade stand, if you have just offered to paint your neighbor's house, you are now a sole proprietorship. They often don't know it. They often don't register anything. That's the beauty of being a sole proprietorship, is you don't have to do anything with it. So you'll see in this formalities area that there really aren't any. There's no organizational documents necessary. There's no EIN necessary. There's very centralized management because it's just you're making the decisions. So anytime you're entering into a business for yourself, you're not working for somebody else as a W-2 employee, the automatic default is a sole proprietorship. For reference, and we're not really talking about partnerships today, but if you're doing the same thing with another person, you're going to be automatically considered a partnership, and a general partnership at that. So those are kind of your default functions. No formalities are required. But the risk going into this liability section is that you have full liability. When you are a sole proprietorship, you and your company are one and the same. You're not considered 2 separate. You are considered a single entity. So if you have a company and you're on your phone and kid falls out of the tree and breaks their arm, and because you're a sole proprietorship, they don't have to worry about what money is in your company or not. They can attach your car for those medical expenses. They can attach your house for those medical expenses. And Scott will talk to us a little bit at the end on how we make sure that first you have that insurance to cover it. But that is the risk. If you either don't have insurance or if insurance doesn't cover it, you are considered one and the same. Anything that happens in your business will affect your personal life. You also will have limited capital because you're not going to have any investors or funders. It's just you. So Lauren, how about the taxes? How do sole proprietorships get taxed?
Yep, so like you said, this is the default. So in the eyes of the IRS, if someone starts making sales, they have a business that's classified as a sole proprietorship. So this kind of entity does not have a separate business tax return. This goes on your individual tax return, whether you're single or married. It's on your Form 1040. That's your annual tax return. There's just another page that gets added to that. That's called the Schedule C. And that's where you report the business, the gross revenues from sales, and then expenses by category to calculate the net profit or the net loss from the business. And so this being a sole proprietor, sole meaning solo, if this is you, this is how you're taxed, and you get to keep all the profits. That's one of the bonuses. If, like Samantha said, if you are doing this business with someone else, then you're not a sole proprietor, then you are a partnership, in which case that is a separate business tax return that would need to be filed for the partnership itself. That's Form 1065. So just make sure that if you've got someone else, someone that's not your spouse specifically, to get that partnership return filed. So as a sole proprietor, when you complete your tax return every year, this profit from the business is subject to your federal income tax at whatever tax bracket you and or your spouse are in, and our state income tax, as well as what's called self-employment tax. So self-employment tax has different names. Some people call it payroll tax or FICA tax. What this is Social Security and Medicare tax. In total, it's 15.3% on your self-employment earnings. And so people always wonder, they hear about paying quarterly taxes. So when you do that, you don't have to file another tax return. It's not like you're filing a tax return every quarter. You're making payments to the IRS and to the state every quarter. If you don't pay it in every quarter, they like to penalize you and charge you more money. We don't want to give them more money than we have to. So that's the importance of paying those quarterly taxes. So if you're just starting a business, it's pretty safe to set aside, you know, at minimum 15 to maybe 30% of your profits every month, and make sure you're paying those in quarterly. And then when you do your tax return, that's generally due before April 15th, you will true up. If you owe more, you'll pay more after you file. If you owe less, if you were getting less tax than you paid in, you get that back as a refund.
So then I lied a little bit. You do have one formality as a sole proprietorship, and that's making sure that you pay those quarterly taxes.
Yeah.
But other than that, it's about as easy as it can be. So with that, then we have a limited liability company. You'll see there's a lot more text on this page, which should give you an idea that there's more involved with it. This is not a default. And in fact, a problem that we see often is people start a limited liability company, but they're not doing it correctly. So they're not actually a limited liability company if anything goes wrong. We get to do what's called piercing the corporate veil and consider them a sole proprietorship. So a limited liability company has more formalities associated with it. So you can choose how you're being managed. You can be member managed or manager managed. Now, if you're considering being a sole proprietor or limited liability company, so there's just you, the odds are good that you're going to be member managed. You're going to make all the decisions still. You're going to just have everything come up to you. We do see sometimes manager managed if, say, spouses are partners in a limited liability company and one is really in charge of the day-to-day and the other is just there for support. We might also see it in a solo limited liability company. If you really aren't in the industry so much, this is your idea, this is your baby, but really you want somebody else to run the day-to-day. That would be a reason to have a solo owner limited liability company that is manager managed. But most of the time, if you are a single owner limited liability company, you're going to be member managed. You're going to be doing it yourself. You do need some documents. You need to have an operating agreement, which is the contract between yourself and your company. You need to have an organizational consent that says that I understand that I'm solo, but I am still creating this organization and here's what I'm allowed to do on behalf of this organization. That's usually wrapped up with your first annual meeting minutes, but then you need annual meeting minutes after that. That's not just your filing with the Secretary of State. That is the fourth thing you need, filings with the Secretary of State, whereas a sole proprietorship does not have to file with the Secretary of State. But you also need annual meetings to kind of do those checkups and show that you are in fact acting like a limited liability company. You're acting like you and your company are separate. You are the owner of your company, but you are not your company. Very important when you get into liability for that one. So if you're not willing to do those four formalities, probably limited liability company is not the right fit for you. Now, 4 is much less than any of the corporate formalities. This is a modified version. Operating agreements don't have to be that long. Annual meetings, you have them with yourself. A lot of people feel a little bit funny about that, but what you do is you read through your operating agreement and you say, is this all still effective? Yes. Oh no, I need to change that. You go and you change that, you make that amendment, that's your meeting. Or you read through your contracts. If you have contracts and you see, like, did this all work this year? Are there changes that I want to make? Meet with your accountant and say, hey, what was my profit this year? Can I set a budget? How much should I be setting aside for next year? These are all questions that you have to ask as a business owner. By doing them in your annual meeting and recording them, you're showing that you consider yourself separate from your business. Similarly, you also need to keep your finances separate. You should have an EIN. You should have a separate bank account. If you are putting money into the company, it should be as either a loan, meaning that you get paid back slowly over time, or as an investment, meaning that you're not planning on getting paid back right away, but you're getting profit for it. You shouldn't just be using company credit card for personal expenses and vice versa. You need to be reimbursing yourself for that. Otherwise, you're not acting like you're separate. Limited liability companies may also have Securities and Exchange Commission considerations or registrations, but that's only once you're starting to bring other people in. So if you are a solo limited liability company and you're thinking of bringing other people in one day, do talk to an attorney about your securities potential, but don't worry about that too much right now. And then also you have to determine how you're going to vote or make decisions. Again, if you're solo, that's not that big of a deal, but you may decide that, well, any purchases over $1,000, I need to record that. I need to have a special meeting so that I can then come back and see what the reasoning is. You may say, well, anything that I do that's a financial decision, I need my accountant to sign off just so there's a second person there. Anything that's a legal decision, I need my attorney to be present at the meeting. So you can make those kinds of determinations. All of those formalities are so that you can get what's called limited liability. So we said sole proprietor, you're here, you're one and the same. The reason you want a limited liability company so that you are here and your company is here. That way, if little Timmy falls out of the tree and breaks his arm, there's a wall there. And we like to call those formalities walls. So we want at least 4 of those walls there so that they can't reach through those walls and get your car. Now, if you haven't done those formalities, there's no walls, somebody can reach over and grab you. We call that piercing the corporate veil. You don't have walls, you just have this thin little veil, they can go through. Think three little pigs and the big bad wolf in there. Stronger your house is, the better it's going to be. So if you follow those formalities, the only thing that you can lose, and this is why we call it limited, the investment that you've put into the company. So there's no guarantee that you can get that investment back. You may lose that entirely if something goes wrong in the company, but other than that, it stops there. Similarly, if your managers, if you have those, or officers, if you bring in officers, or you, the member, act in good faith and in the best interest of the company, you won't be personally liable. If you're not acting in good faith, that's not going to hold. But to the extent that you're doing the best job that you can, you're also going to be protected from personal liability, not just as that member of the company, but as an actor within the company. Also, with a limited liability company, you will get more access to capital than you would from a sole proprietorship. So if you need loans from banks, if you're looking for investors, although if you're looking for investors, let's talk about the Securities and Exchange Commission filings. You may be able to have individuals who come in and work for you for profit. So there's a lot more flexibility with a limited liability company. So Lauren, what about taxes for a limited liability company?
So for a single member LLC, so one owner, I would repeat everything I just said for the sole proprietor. They are taxed the same. So not a separate business tax return. It's on your individual 1040 with that extra Schedule C page showing the business profit or loss. You also get to keep all the profits, and you're still subject to that 15.3% additional self-employment tax on the federal side. So same thing here is if the LLC is owned by multiple members, that makes it a partnership. That is a separate entity with a separate return that needs to be filed on the Form 1065. Another distinction here is that an LLC can elect to be taxed as an S corporation. This is not a default by any means. You have to file a form with the IRS to be treated as that way, and then a separate business return would need to be filed. It's a little bit more complex and more regulations you need to consider. But if you're just single member LLC, it's the same as that sole proprietor. And so on that note, when Samantha touched on getting an EIN and keeping separate business finances, that is more important at this LLC level, although I do recommend, even if you are a sole proprietor, doing that anyway. So once you become an LLC, you can get the EIN, that stands for Employer Identification Number. That's basically a business's social security number that allows you to get a segregated business bank account. And in this structure, you want all business income and expenses flowed through that bank account. But even if you're a sole proprietor, I recommend getting a separate business or a separate bank account, even if it's a personal account. So you have segregation, one, for ease of record keeping, so you know that these are business expenses, and two, in the eyes of the IRS or the state, that you're not considered commingling funds from business and personal. So it's always just a good habit from the beginning to keep those records separate.
Great. And especially with growth. So with a limited liability company, since you can make those other elections, you can grow a lot within a limited liability company without changing that legal structure. Remember, that's that difference between legal structure and tax structure. So if you're very growth oriented, a limited liability company might be a good place for you. But always talk to both your accountant and your attorney before determining your pay structure within your LLC. So, or within your LLC, or even just within your business, how you're getting paid on things, just to make sure that you've gotten everything recorded correctly, that you're taking advantage of any of the tax situations available to you, that you have the correct documentation. So do always make sure of that. Other considerations when considering which of those businesses to go with, certain types of businesses may be better fits for different structure. So if you have employees, or if you're planning to have employees, you may be a better fit in one business than another. If you're planning on bringing other people in, you may be a better fit for an LLC than a sole proprietor, because you're going to change from a sole proprietor to a partnership once that happens. Whether you're willing to keep up with those formalities that I've listed. If you have that LLC and you aren't doing the formalities, you're actually a sole proprietor. So you've spent more money to be something that you're not. And then there may be other considerations as far as what other taxes and things like that you have to file. Lauren, any other considerations to bring up when deciding whether to be a sole proprietor or an LLC?
Yeah, just to be aware of any other tax filing or collection and remittance obligations that your business may have. One is sales tax. So if you're selling products and certain services or bundles, may be subject to sales tax, in which you're obligated to collect from the customer and remit to the state, city, and or county. And all those rules are different. So you need to make sure that you're well versed in what your responsibilities are. And same thing with state taxes. A lot of us are web-based businesses. We're doing, commerce in many different states. Do you have a reporting requirement if you're making money in a different state, or if you're doing only your business in your state? So worth checking out. And then they will say, just on the LLC side, just because we looked at, since those entities are taxed the same, it's really just that administrative step of getting the LLC set up and keeping up with those requirements, but they're really not much, and it's very low cost to get this set up. A CPA or an attorney can file the articles of organization for you with the Secretary of State, and it's very low cost to maintain. And it may seem like a lot of record keeping and all that we're talking about, but it's really not much at all. So if you are waffling between these two entities, strongly consider the LLC and know that it's not as much as a headache as we might make it sound like.
And I think that's a great point. And that benefit in there comes in that risk level. So if you aren't doing something that's terribly high risk, if you're selling homemade necklaces, the additional protections from an LLC are not going to be as important to you. But it's also not very hard to get those done. I mean, it's that outset setup and then the once a year obligations as far as the annual meetings go and the Secretary of State goes. Whereas if you're in a higher risk, if you're doing anything with food, if you're doing anything with kids, if you're doing anything with topical anything, if you're going into people's houses, all of a sudden you're looking at much more expansive risks, and it is definitely worth the couple of hours a year to do those formalities to protect your house, your car, your spouse's income, your other income if you have a second job, your savings. So since the tax treatment is very similar, those really are going to be the things that you're looking at.
Okay, so I think that was a pretty good overview of comparison and contrast between the two entities that most of you probably fall into, a sole proprietor. Some of you, I believe, already are LLCs. So we want to open it up for you all to ask any questions. Lauren Metz is a CPA with Antora LLC, right? Is that, yeah. So, you know, just maybe quickly, Lauren, just go over one more time on that liability side, because at the very end, Sam talked about if you're in one of those higher risk categories, and she mentioned children, like what can happen on the liability side. And Scott, hello, Scott is our insurance broker, who's going to talk a little bit more. Nobody likes to really talk about the liability and things that can go wrong, and yet it's really important to think about protecting your business and your own personal assets. So Lauren, do you want to share a bit about that?
Sure. I mean, so I'm not an attorney, but just from that perspective, the liability that you guys have of having people's children in your home could be infinite. I'm going to let Scott speak more to that in a little bit. But what I was trying to say in that webinar is that the act of setting up an LLC is very minimal. You can do it at any time. You can do it tonight. You can do it tomorrow. It's very simple. I know we kind of listed off all those things that you need to do, and we kind of made a bigger thing out of it than it is. It's really not much work at all and not much to maintain. It's a $50 filing fee to the Secretary of State. So initially when you set it up, $50, $10 every year to maintain it. So unless you skip keeping up with filing that form every year, and they charge you a late penalty, it's very low fee. And then I talked about kind of the segregation of business bank accounts, and that's more to protect your financial assets. And so if a parent sued you or something happened, you're starting to have this segregation between business and personal, so that your own assets, your home, and everything else are protected. So I'll let Scott talk more about liability. I don't know if we want to do that now or later, but we'll get to all that.
Yeah, let's focus a bit, and Scott, will have you present a little bit more on the liability side. So I know that you all have some questions about the tax implications and of the two different entities that came up last week. But do any of you have any questions for Lauren on this issue of LLC versus sole proprietors and the tax?
Yeah, I'm sorry. Just a quick question. She said anytime we can do it online, it's just a fee. So what website or what's the link for that to do it?
I'll put the link in the chat. I'll find it real quick. So it's the Colorado Secretary of State. I'm assuming everyone's located in Colorado. And what the form you want to file is called Articles of Organization.
Can you put all this in an email or the chat, please?
Yeah, absolutely. So I'll put that in the chat. When you file your articles of organization, something to remember, you want to follow the instructions very closely. You can also hire an attorney or a CPA to do this for you. But if you follow the instructions closely, you can do it yourself. Something that you need to consider is the business name needs to end in LLC, LTD, or limited. So it can be your name. So I could be Lauren Metz LLC. It could be any name. And there's a search function on there. You need to make sure that no one else in the state has that business name. But if no one else does, it's yours. You just have to have one of those three, LLC, LTD, or limited. So let me find that real quick and I'll drop it in the chat.
Thank you so much.
Lauren, I have got a question. So you said keeping your business account and your personal account separate in case a parent sues you and you don't have anything in your business account. Isn't it automatically they're going to jump into your personal assets, or they can't, or what's going to happen?
So it depends. And I'll probably let Scott talk to some of this as well. Some of this is more a legal question and I'm more tax focused. You can create even more protection and segregation by putting your personal assets in a trust or an estate. So I'm not saying that they can't go after your own personal assets. They still can as an LLC, basically under any entity that you are, even if you're a corporation, they still can. We just are adding some steps. Kind of Samantha said this in her presentation about building walls of segregation between you and the business. It's kind of one extra added step to go through. So that's why having the insurance is going to be so pertinent to make sure that you are protected in that way. And so on the tax side, because that's where I focus. So when you have profit from your business, 100% of that profit does not belong to you. If you have profit, the IRS and the state are owed a cut of your profit. We owe them tax on that money. And so that is where we really do not want to mess with the IRS or the state, because they will come after your personal assets. If we're not paying in our taxes on time, we're not paying in enough, they can put a lien on your home. They can levy your bank accounts, meaning they can just take money out of your bank accounts if you're owed tax, or other assets that you have, like a vehicle. So yes, these things are important to have the insurance, to have the segregation in the LLC, but making sure you're in compliance with tax filings and paying in is extremely important in protecting yourself. And I mean, of course, protecting the children and just covering all of your liability. Does that kind of make sense?
Yeah. I understand. Thank you.
Hey, Lauren.
Yes.
This is Jim Opper. I'm with Jenny. So one of the mistakes that I've found out is that we kept the same business name, but we just changed it to the LLC. But since the first was still a sole proprietorship, it became very confusing because I kept going to the wrong thing. And so we actually paid fees or delinquency because I didn't know that we had to file certain paperwork and everything else on a quarterly basis or on a regular basis. And so because I was going back to the old business, the sole proprietorship, then it just became very confusing. And eventually when I finally talked to somebody from the Secretary of State, they told us to go ahead and file for dissolving the sole proprietorship. Just a caution, that's all.
Yeah, so if you had, so some people create a DBA, that means doing business as. So say you create it, like it's like a trade name. So say you create a business name, but you're still sole proprietor. And so sometimes I think what you're getting at is if you create an LLC, but you kept that old trade name active, that went into delinquency, and then they were probably charging you late fees on that. So I think you're saying is file, there's another form to file is the articles of disillusionment or yeah. So you want to dissolve the LLC before establishing a new one, or dissolve the old trade name. Any tax questions specifically on how to pay the quarterly taxes or how to estimate that or anything?
So Lauren, the group just is going through their time space calculations. So there's, you know, special, they've gone through the IRS form and we have a spreadsheet. Can you talk a little bit about the importance of having, because they're home-based businesses, sort of the, I don't know, do's and don'ts of, and why it's important to have that percentage be accurate?
Sure. So like all the reporting that we're going to send to the IRS, we want it to be as accurate as possible. And the biggest thing, your risk is if you get audited by the IRS or the state. And if that happens, they're going to want to come into your home. They're going to want to see the space, and they're going to pull out their tape measure and they're going to measure it, and they're going to make sure that what you've reported on your tax return matches the space in your home. And they're going to want documentation of what you were doing. Maybe look at your calendar and say, what days did you have children in your home? And what days were you cleaning and all these things. And if things don't check out, they're going to say, nope, you overreported your deductions, and now we're going to charge you additional tax plus penalties and interest. And I don't want any of that to happen to any of you. If you don't have the money to pay it, like we said, they can put a lien on your home. You may have to get on a payment plan with them. Really affects your credit score, all that stuff. So that's really the importance of accurate reporting is, and kind of why we talked about having that separate bank account, and you can have, you know, one dedicated bank account where all income and all expenses to the business are in one place, very organized. It's going to smooth that audit process. And then part of that is for your own use. So leave the IRS out of this, but you all need to know what profit you have. And for budgeting purposes, for both business and personal. So as much of a pain as it is to segregate when you go grocery shopping or to Target, some of it's personal and some of it's business. Check out separately. Do this cart first for the business, do this cart second for personal, and really have them distinct so that for your own purposes, you know. And I'll say, like, almost as a warning here, I want, like, we can talk about deductions and what's legitimate, and you should be claiming legitimate expenses. But I recently had a consultation with a childcare provider who has been showing very little income from her business because she has so many legitimate expenses. And now she's trying to qualify for a mortgage, and she can't find a lender to give her money because she doesn't show an income, much of an income, on her taxes. And so that's another thing to consider if you ever want to get financing in the future. They need to know that you're making money. And I want you to all have profitable businesses so that you can save for your retirement, you can save for the things that make you happy. So there's kind of a trade-off between showing a profit and not.
What is the reasonable profit margin that for, in other words, to pay yourself, what percentage of your income from the business should you use for your personal income?
I can't give a percentage, but it needs to be, so if we look at this through the eyes of the IRS, your profit from the business needs to be a reasonable living wage. If it's not much of anything, they're going to ask themselves, well, how are you feeding yourself? How are you paying your mortgage? Because if you're only showing $10,000 of income or less every year, they're really going to question, how are you living? And that's when they start looking to audit you, because year after year, you're not making a good amount of money. So I don't have a percentage for you, but definitely show a reasonable living wage for you and your family is the best advice that I can give.
Lauren, sorry, one more question. I got to know that when you end up selling your home and you've been doing business in it, do you need to pay extra taxes?
So what happens here, so when you're claiming this space of your home, we call it depreciation expense. So when you have an asset, we depreciate it. And that means we're taking a little bit of expense every year. And so in the use of the home, you're taking a percentage of it and you're getting a reduction of your taxable income every year. So when you sell the home, we have to recapture that, as we're calling it, recapture the depreciation. So say in the years that you were running the business in your home, you claimed $10,000 of deduction. When you sell the house, there's a couple different things that happen. So one, you could have a gain on the house. So it made money since the difference between what you bought it for and what you sold it for is higher. So that could also be taxable. But the amount that you had deducted from the business in the past now becomes taxable income. So that $10,000, as an example, is now taxable income. So that's something to remember, that if you are ever planning to sell your home, to budget for and set aside the taxes to pay that extra amount.
And is that true that if you end your business 2 years at least before selling the house, then you're good?
So this is above and beyond. So I think what you're talking about is there is an exclusion. So when I said that gain on the house, there's an exclusion for up to $250,000 for a single person, up to $500,000 for a couple. That if you have that gain on the sale is not taxable to you. But that depreciation recapture, this is above and beyond that. So even if you qualify for the gain to be excluded, you still have to pay tax at the ordinary income rates on that. So if we're getting too deep, feel free to get a consultation with me and we can talk to your specific situation and we can go into more detail.
Thanks, Lauren.
So one question someone had last week was in the time-space calculation, because they have yards that the children play in, can they use their percentage of their yards for the time-space calculation?
I'd have to review the instructions and see if it specifically includes it. I think it's only the house itself. But I will say, in terms of deductions, maintenance on the yard. So if you're hiring a landscaper to come mow it, or you have a mower that you use, those kinds of things are deductible because you are using that space in the business. But off the top of my head, I think this space is only just the square footage of the home, the house itself. But I can double check that for you.
Okay. Yeah, it seems like you could have the park down the street. And, so does anybody have any additional questions for Lauren? Lauren is one of our consultants, so you can book a free session with Lauren. She can help you talk through LLC issues, tax issues. So
Lauren, can we call you if you want to register for LLC? I mean, can you go with us on the steps?
Yeah, so I can walk you through the steps. I can tell you how you would do it. on a consultation. If you want me to do it for you, we'll have to do an arrangement outside of the SBDC.
Okay, sounds good. How we can get your number or email or something?
Hannah, did you just put it in the chat?
Yes. So yeah, Lauren has a online calendar. You can just reach out to me and I'll help you get connected with that and any of our other consultants.
Thank you
to get
so much.
scheduled.
And Dawn can do this as well. So if Lauren is busy or something, Dawn can walk you through all the steps. She can screen share with you. She's been doing that. So between the two, you guys are in really good hands. So yeah, unless there are any other questions, we want to thank you, Lauren, for coming on tonight and providing great information.
Glad I could be here. I know tax and legal are not the most exciting things, so I hope I made you all ready for bed tonight. It's so thrilling. So, but best of luck, and I'll hand it over to Scott now.
Thank you.
Thank you so much.
Awesome. So, guys, let's talk. We're gonna talk a little bit about insurance, liability insurance. Dispel some misconceptions perhaps about what homeowners insurance covers in terms of liability. And we want to welcome Scott Hughes, who's, I'll let you introduce yourself, Scott. He's an insurance broker who has been working with child care providers.
Thank you, Angela. And I'm going to go ahead and share my screen, if you don't mind. All right. Can you guys see that slide? Okay. Yes. So I am a insurance broker. So I work, hopefully by the end of the year, I will be an official consultant with the SBDC, but I haven't completed all that yet. So my goal is to have it done here in the next month. But I do want to talk about insurance. And for those of you running your daycares out of your homes, this is really important. There's a lot of stuff that isn't covered by your homeowners. So I want to make sure you're aware of that in ways you can get covered. So I know everybody's getting tired. It's towards the end of the day. I'm not going to make you read all this. I'll kind of cover some of the highlights, but a homeowner's policy usually isn't enough to cover your business exposures. For one, does your homeowners or renters insurance company know that you're operating a business out of your home? First of all, you need to notify them before they can even endorse your policy to have the right coverage. If they offer it, not all homeowners companies will offer this coverage. Do the limits they do offer, are they very much? Are they shared limits between your personal liability and your business liability? If you have a claim on your homeowner's policy related to the business, will it jeopardize you being able to get homeowners insurance or renters insurance in the future? So these are all some things you need to consider when you are looking at how you want to do it. And a lot of homeowners policies that do have business use endorsements on them, they don't cover certain things like child molestation, abuse, any kind of professional coverage that a business policy could cover. And they may not provide no fault medical payment coverage. So if one of the kids that is under your care just gets injured, nobody's really at fault. They tripped and fell, but the parents think you were responsible for it and they want you to pay their medical expenses. They may or may not be covered under a homeowner's policy. So something to consider as well. So what could possibly go wrong? Why should you care about the coverage that you have in place? Well, this is your livelihood and hopefully you do care a little bit about protecting it and everything you've worked hard for. General liability claim here. This is Tyler, a student fell off a swing at the playground. This could be on your premises, or it could be at the park down the street where you've taken the kids. His 2 front teeth were knocked out. He incurred $2,000 in dental work. Tyler's mother filed a claim for the dental expenses, an additional $5,000, alleging emotional distress. And that's all coming to you. So whether you're paying that out of your pocket or you're letting insurance cover that for you, that can be covered under insurance. A second claim example, a disgruntled parent claims her child had bruises on his arm. When asked, her child stated his teacher hurt him or his care provider. Charges filed, included in proper hiring and proper training of employees. You may or may not have people helping you. It may just be just you. But employees are also another area for exposure that could cost you a lot of money. Attorneys are hired to defend the school or the daycare against these charges. The case is dismissed after an investigation fails to prove any abuse occurred. However, the defense costs amounted to $25,000. So legal fees can get pretty expensive pretty quick, and a very inexpensive insurance policy is one way to cover those costs. So why would you spend money on insurance if you don't have any already? A lot of the stuff I've already mentioned, child getting injured, bodily injury occurs while in your care. False accusations is probably the biggest one. Oftentimes nothing really occurred, but they're claiming it, and it causes a whole lot of, sleepless nights for you, and you having to get attorneys to help defend you. If you do have an assistant or somebody helping you that you do pay, whether it's 1099 or W-2, it doesn't really matter. You're still your employee in the eyes of a situation that would occur, whether it's an injury and whatnot. Emotional distress, that's another one that somebody's going to sue you for. So, so what to look for when you're looking at the coverage you have in place or that you might be getting or you're considering getting. Professional liability is not automatically included with general liability policies. So not all policies are created equal. See if they have a liability deductible. It's not very common to have a liability deductible. That's usually on property insurance. Child molestation and abuse. Again, this could occur between two children in your care. It doesn't necessarily have to be you abusing the child. It could be one of the other children. You look away for a minute or two and something happens and you're still held liable, responsible for it. Sometimes the homeowners policies will only cover you on your premises. So if you go anywhere with the children, there may be no coverage. Again, another reason to consider a business policy. What else is worth? Hired and non-owned liability. If you're using auto liability is important too, because if you're using your personal vehicles to transport the kids anywhere, a lot of personal auto policies are going to exclude coverage. If there was an incident that occurred, an accident, and they find out that you're using it for business purposes and you didn't have a business use endorsement on your personal auto policy, just another area that you may want to talk to your insurance agent about to see what you do have in place. So what's this going to cost you? Everybody wants to know, well, I want to have coverage, but I, want to know how much it's going to cost. So the cheapest route is usually to endorse your homeowners or renters policy that you have in place. They put a business use endorsement. You do have to tell the insurance company what your business is, what you're doing. They may ask you a few more questions about how many children, things like that. This can run you $100 to $300 a year, maybe, depending on the insurance company, what they charge. They all charge something different. You can go buy a standalone policy, a business policy on a GL so general liability with professional liability. This can run, generally speaking, anywhere from $500 to $1,200. Again, there's a lot of factors about how many children you're taking care of, how many you're licensed to versus how many you watch, how many, if you have any employees, things like that. That all impacts the cost of the policy. If you do have any employees, workers' comp insurance is legally required of you. That's a state law. So you do have to have that for those employees, whether they're W-2 or 1099 or independent contractors. If they got hurt while working for you, you're going to need workers' comp. Again, it's going to cover them for injuries to those employees, lost wages, and any other medical bills that they might suffer. In business auto insurance, again, if you're using a vehicle, you may want to consider putting it into the business name, registering it in that name. Again, these are all just different layers, like Lauren talked about. The LLC is one layer of protection, an insurance policy is another layer. There's only so much you can do, but the more you do put in place, the harder it is for somebody to take it all away from you. So, and a disability policy is something else. Basically, it's a living life insurance policy. So if you were to become injured and couldn't operate your childcare for several months, what's going to happen to you as far as your income? You're not going to be able to have any. So a disability policy is something worth considering. It could be something as simple as Aflac, or it could be most life insurance companies offer disability insurance as well. So there is underwriting involved with that. It's based on your age, your health, all that. So I can't tell you what the cost would be. This is my contact information, and if you guys have any questions, I'm happy to take them right now. So
Let's see. Oh, Scott.
Great. So do you want to unshare your screen?
Yep. Sorry.
Scott? So thank you. So what questions do we have on liability insurance for Scott?
I think somebody's talking.
Khadija, I can't, you're on mute.
Hi, Scott.
Sorry about that. So
I-
we have who?
Go ahead.
Khadija, you go first, and then Jenny, you go second.
Okay, thank you, Angela. So we have homeowner insurance, and I know that Scott went through some steps that homeowner insurance will cover whatever, I mean, for the child care. Could you just name those or those items that can be covered under our home insurance, not business?
So the most common ones that they will cover if they're offering to provide coverage for your business in the home. Typically what I see, and we work with a handful of different companies and they're all different. And then there's even more that we don't represent. So they do vary a lot, but at the most basic level, they'll usually cover things like med pay, depending on what your limits are. Common limits are 1,000 up to 5,000 for med pay. And again, that's when there's really nobody's truly at fault, but an accident occurred on your property.
Even though not to ask to somebody else, to one of the parents or one of the children?
Yeah, it could be anybody
Okay.
stepping on foot on your property.
Okay.
And then other basic, trip and fall, slip and fall, that kind of stuff.
Okay.
If you have any pets, there may be some exclusions for dog bites, things like that. So, again, stuff you got to look through your policy to see what exclusions there might be.
Okay. Okay. Okay.
But they usually don't have the sexual abuse and molestation and those kind of things.
I'm sure.
Under
Okay.
professional liability. So,
Okay. Thank you, Scott.
sure. I think, did Jenny have a question?
Yeah, I have separate insurance just for the kids.
Uh-huh.
I don't remember exactly, but I think it's 2 million. Is that good enough, or it should be 3 million? Somebody say it should be better more than 3 million, but I mean, somebody told me to instead of buying over 3 million to get an umbrella cover. What do you recommend?
So generally the most common limits are 1 million per occurrence with a $2 million aggregate. So that means the $1 million is basically for every one claim or one incident in a policy year. And then the $2 million aggregate tends to be, in theory, you can have 2 claims going in the same year, each up to $1 million. So that's how that's set up on most policies. Yes, you can get 1 million, 3 million, and it's usually not that much more expensive. If you can get a $2 million per occurrence limit, that's great. I always say get what you can afford.
Yeah, I think mine is 2 million.
Afford it, get it.
Somebody told me to get an umbrella cover over that.
Yep. Yes, if you can get it and afford it, an umbrella over, and hopefully it goes over everything you have, including auto, including, your home. Yes, it's worth getting.
She has an umbrella for coverage for the vehicle because we use the vehicle for family as well as for business.
Yep.
So that's how the policy is written for the car, but for the business, she has a separate liability insurance.
Yep, and you can get an umbrella just over the general liability if you want, and that just increases those per occurrence limits. So yeah, if you have it in your budget, I would say get it. Umbrella is always a good.
Okay, thank you.
Yep.
Another question. It is so hard to actually find a good insurance for childcare.
Affordable.
Or there's the limit. I think I have looked for many years.
There is fewer and fewer companies that are offering coverage for childcare. Yes. Unfortunately, there's not as many as there used to be because of all of the lawsuits and claims that have happened. A lot of companies got out of insuring the businesses. So, and the ones that still do ask a good amount of questions. And the ones that offer good coverage, in my opinion, ask a lot of questions. So be prepared.
Do you know about something about the Assure childcare?
Yep, I've heard of them. It's kind of it's a special program. The backer behind it is Philadelphia Insurance, which they're a good company. I haven't read through their policy or anything, but yeah, it's not bad. I can't say anything bad about them.
Okay.
And Scott, you don't represent one, you're a broker of multiple insurance. So maybe tell a little bit about two questions, your role at your company. And also, can you just touch a bit on COVID and where that's a whole new, arena of liability? What are you seeing and what should the group know about that?
Well, yeah. So I work for an independent agency in Westminster, and we represent a few dozen different companies or carriers. So we don't have just one interest that we're representing one company. Agents that represent one company tend to be Allstate, State Farm, Farmer. They only represent, that's kind of their contract is to represent one company. So we represent multiple companies, so we can move our clients around within the companies we represent. Regarding COVID, there's really, and this is regardless of what business you're in, it's, again, a lot of people want to point fingers or blame somebody, but it's not any different than flu season when somebody's like, well, I know I got this from you or from somebody at your home. And what I've seen so far, nothing's really going to get anywhere because it's hard to prove anything. So, a lot of people are going to get upset and a lot of potential lawsuits could come about, but I don't see anything actually happening. And there's a lot of worry, but from the liability side of things, I mean, if you're doing all the proper precautions and things that are recommended through the state and what they're advising you how to operate your business, I think you're fine.
Scott, we've been talking about leaky buckets and losing revenue and that sort of thing. And so can you talk to them about the benefits of just checking in with someone like you every 2 years or so to look at the cost of their different insurance products?
Yeah, I mean, as people's businesses grow and change and they're doing things they weren't doing a year ago, or they're twice the size they were, needs do change. And that's for any business. So yes, it's really important, whether it's once a year or every other year, that you are reevaluating what you have in place, what you don't have in place, what you might need to put in place, because there are things that you may not have thought of. Like, for instance, you don't have a van or a vehicle that you're using for transporting kids right now, but let's say you get one in the future. You don't really tell your carrier that you're insured with that you're using that for business purposes. You could have, an accident and there could be an exclusion for business use because you never told the company or your agent that you were using it for business purposes. So, and it's not like it's an expensive thing. That could have been an easy fix for $50 or $100 a year to add that business use endorsement. So again, those are reasons why you may not think of it in the moment, but if you are doing those annual or every other year checkups on your insurance, it's a good idea. So.
And you can find that frequently the price of insurance goes down when they change insurance companies too. I mean, that's been my experience as a homeowner. Like every 2 years or so, we kind of look at it and change products. And
yeah, generally speaking, Colorado's very different. I've talked to a lot of people who moved from out of state, but I've even gone back and looked at some of my old policies from like 10 years ago, and rates are very high here, especially when it comes to auto insurance. And you know, you may get lucky and save a bunch by moving every other year or so. But the general trend right now is rates are going up. And on the business side, they're pretty steady. On the general liability side, those are pretty steady. Workers' comp is actually one of the few lines of business that they've been going down the last 3 years because work comp claims have been going down. So, yeah. But it does pay to look every few years, yes.
Does anybody have any other questions for Scott? And we put his contact information in the chat, and Hannah can hook you up with a consult with him as well. Any other questions?
Oh yeah, and one last thing, any good insurance agent shouldn't be charging you anything up front. All insurance agents get paid the same. They get paid on commission. So they should all be giving you free consults or advice when you go ask. So if you're working with anybody who charges money up front to get insurance, then I would get a second opinion.
Okay, good to know. Awesome. Well, thank you so much, Scott.
Sure. Thanks for having me.
Really helpful information.
Yeah. Everybody have a good night. Thanks for having me.
Okay, so we have a few minutes left in class, and I'm just gonna open it up to you guys. If you want to ask John, I don't know if and Nicole, if there are any updates to give the class, or this is your time. If you guys have anything you want to ask of each other as peers, then we can use this time. Otherwise, we can close early tonight. So let's start with Nicole and Dawn. Do you guys have any updates that the group should know about?
Well, I have one update, and it could be just more information, more opportunities, right? So I'll just share. I just recently learned that I don't know if everybody heard the announcement, but there was scholarship money available for early childhood professionals to earn their CDA working through Childcare Innovations. I just learned that they still have scholarship money available. And so if you're interested in getting your CDA, which is the Child Development Associate Certificate, they have scholarships available to help you do that. They can pay for training and pay for the cost of the certificate. So I guess that's one update, being that I was just informed that there's still money available. The other thing that I'll share just through ECPAC, again, more opportunities, is that ECPAC has the opportunity for early childhood professionals to earn continuing education units through an online platform where you would access training any time of the day that you would like to. We are able to offer this at a low cost. It's only $25 to have a membership to the training platform. The training platform is the Child Care Education Institute. Some of you may be familiar with that platform. Generally, a membership would cost $100, but through the partnership, ECPAC is able to offer it for $25. Those continuing education units is something that you can use in your professional development information credential, your PDIS credential. So it's just a couple opportunities I wanted to share just because, you know, if they're out there, why not take advantage of them? And I can place the CDA scholarship application link in the chat box, and also the link to the, 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 CEU's opportunity in the chat box as well.
Great. Any questions about these opportunities for Nicole? Awesome. Great. Thank you. Dawn, any updates?
I actually don't really have any updates for today. I think all of you know that tomorrow Adams County moves to red, right? They increase in severity in terms of restrictions, but that still doesn't affect you in terms of being able to offer childcare. It might ramp up the fear factor in families as far as placements go. And I know that ECPAC and I would like to hear if you're running into those kinds of issues. We're trying to kind of keep on top of that and be aware of what's happening in the community.
I have a question, Dawn, or maybe, I don't know who can help me. I have a family that they are, so the mom and dad, they both have COVID, and should I ask them, she was asking me for the protocol, how, like when to come back, what do they need to do? And I emailed my licensing specialist. I haven't heard anything back. So I was like, what do I do? There's a bunch of information. When you get specifically what to tell a parent when to return, it just gets more specific. They were told by their physician that 10 days after the symptoms are gone, they can get out and do their normal activities. I mean, now I don't know if I should ask the 4-year-old to be tested before she returns. They're not planning on returning till after the Thanksgiving break, but still, any resources? Who should I ask? I haven't heard anything from my specialist. I'm planning to call her tomorrow just to let the parent know.
I will tell you, like, the licensing specialists generally will defer to Tri-County Health, and they're going to ask you to talk to the health department about that, because the epidemiologists are on top of the science and they know kind of what those issues are. Nicole, I don't know, do you know anything about the current stuff? Because in Weld County, I'll tell you what the advice is in Weld County, because that's the only department that I can really speak for, okay? They say if a parent is sick with COVID, then they have to isolate for 10 days, and they need to keep their children home with them because their children are exposed. They can, after 10 days and symptom resolution, they can go ahead and return to work. But here's the catch. If their child has been around them in close contact, which is 15 minutes in a 24-hour period, then they've been potentially exposed. So even on day 10, that child has been exposed to COVID. And so their quarantine of 2 weeks starts after that 10-day period. So they're actually home for 10 days plus 14 days on top of it. And where it gets more complicated is that, say dad has COVID, mom doesn't develop COVID until 2 weeks, like she's 2 weeks in, and then develops symptoms, then you have to do that whole 10-day and then 2-week thing on top of that. And so it really mounts very quickly.
Yes.
But I would say Tri-County Health will tell you if that's the way that they're understanding the science of all of this. And so I would recommend talking with them.
Okay,
if you
so
can get a hold of them.
Okay, because I
Yeah.
emailed them when it happens first. I send an email. I never heard anything back, and I know that it's crazier now than 2 weeks ago. They don't even have time to reply to people.
Well, and the
this
hard
is
part
more-
is you guys are homes, and they generally don't support homes, right? Because they don't come to your house and inspect. So I don't know. I know that around the state, that's a big concern for home providers, that they're not getting that kind of support from local health departments. Nicole, have you, do you know anything about that, or is there maybe a way now to set up another chat with them or something potentially, or?
You know, the advice that you gave seems pretty similar to, you know, what Tri-County Health is expecting. I cannot speak on Tri-County Health's behalf. They are our go-to resource. We do offer those chats calls. This week, we actually had 2 of them. I'm not 100% sure when we're having them back on the next chat call, but I know that we do have a direct contact at Tri-County Health who works specifically around childcare. Her name is Courtney Tomlin, and she is our contact. I can always share her contact information. I don't know who you're reaching out to, but if Courtney Tomlin doesn't sound familiar, it might be worth a shot to reach out directly to her.
Okay, yeah, I would like anybody who can help me, because now we have to be so specific. What date, okay, was the dad diagnosed? And to me, logically, I was like, whatever their doctor, advised them to do, or the pediatrician or their family doctor, okay, now you guys or your child is safe to go back. I should just take it from there, because the doctor is in contact with them. They know when it was diagnosed, when the positive test result came, when they should, but I cannot say that. I cannot make that rule. I have to be, because I have the responsibility, all these other families, that what if they get it and they are going to be, oh, they were back early, that's why we got it. Anyways.
I do know that the state health department is putting together some new guidance documents that they've been tweaking and modifying. They're expecting those to come out in December. So what I will do is if they come out while we're still doing class and stuff, I'll make sure that you guys get copies of all of that as that happens, because and either way, I'll make sure that ACPAC gets it for their childcare updates. So if you guys are all signed up with them, you'll receive those updates on a weekly basis. So you'll get the information that way too. And it'll talk about specific, like even symptoms, right? To watch out for, like, when do you know that minor symptoms, you know, how many minor symptoms do you have to exclude a child from care? And what about if they have no sense of taste or smell, or, you know, all of the different things. It's flow charts that walk you through that reasoning.
Okay, that would be great. Thank you so much.
Can I say something?
Go ahead, Jenny.
So I went through that maybe 2 weeks ago, I think. I called my license. They don't know nothing. I called Charles County, spent 45 minutes. Finally, I talked to them, and the lady told me, just go by what the doctors say.
Yeah, see, that makes sense to me.
I got to the point where I was very upset and very stressed out. I said, you know what? I don't worry about nothing. I'm going to do what my judgment say. We test everybody. Everybody was perfectly fine. I opened in less than a week. Well, after a week. And everybody, we already went over the 14 days. Everybody's perfect. So at this point, one of my clients got crazy and paranoid and all that, because they start reading websites on Google and everybody says something different. And they come back to me and say, well, this one says this one and this one and say that. And I said, you know what? This is my rule. This is my house. Like it or not, then you can leave if you don't like it. This is my rules. And I have to pop and actually become angry and talk and say, this is my house. If you want to come here, good. If you're not, then stay in your house and be safe. That's it.
I think, yeah. And Jenny, I think that's smart. I think what you can do is like write down those protocols that you use, right? Here's what I'm going to do with COVID. Here are the precautions I put into place in my home. Here's how I clean, all of those sorts of things, right? And if there is a case, like if a parent tests positive or has symptoms, please keep your child home, whatever, like outline what your requirements are for you and have the parents sign off on that so that you have something to show, like you signed this, you agreed to this, you know, and you can say who's getting paid or not getting paid during all of that, right? So that you don't have arguments in the moment.
Yeah, well, I learned the hard way. But there was a client that I enrolled 1 week before we went down with all this. Mm-hmm. Over 8 months, everybody was safe, right? Mm-hmm. And she signed and she got so mad at me. And I was like, at the end, I said, look, you blaming me, but you should blame yourself because you brought her to me and you know we're in the pandemic. I didn't went to your house and knock at the door and told you to bring your child to me. So I have to be mean but strict, because they come to you that you know we are in the pandemic, that you know they don't want the child to be sick or nothing, then keep it at home, right? I'm like, there's nothing I can do. I told them, I said, look, I have no control about COVID. I don't. I can be the whole year with nothing. I can be, like over 8 months, but we don't have no control. And now COVID do not show themselves like I used to say. Fever, no. I swear. COVID, it's coming different way. It's not with fever. Because I had a child who was spending a week with us sick, who, within it to us, she shows no symptoms of nothing.
I like your rule. You are super lady, Jenny.
I just want to add something. So I found out this past Tuesday, that if you're living in the city of Thornton and you're having a business, you need to have a license with the city for having the business. If you don't have that, you can't get any of these grants. And probably you also need to pay taxes to the city. I didn't know it for the last 2 years that I've been running my business. And I didn't find it from any resource that it was mandatory for. I don't know, it could be also true for other cities, but for Thornton for sure.
So what kind of license they asking for?
So if you go to the City of Thornton home businesses, cityofthornton.com, there you can find all the forms. You can just fill out the form and submit it, and they'll give you an account number. And
Licensing used to ask you if you had a business license. They used to check that box for you to make sure you were on the right track, but they found out that it wasn't in statute for them to ask that. So they have it built into statute to be able to ask about zoning, but not business licenses. So about 2 years ago, year and a half, 2 years ago, they stopped asking that question. And so now, because of grants and stuff, like we're finding lots of providers haven't taken that step to do that because no one was asking them about it.
Oh,
yes.
So the license is now the same as the zoning thing?
No, it's a different.
Two different things?
Yeah.
It's not hard. You just need, so I was lucky enough because the lady guided me through, and she said, I was like, can I do it now? Because I applied already for the grant, and everything got processed, and I was at the point of getting the grant. And that's when they asked me for the license number. I said, I don't have anything like that.
In most places, it's not typical, but some jurisdictions, it's complicated, right, Bushra? Some places, it's very, very difficult.
I have a bad experience. Still, I'm suffering with that. And you are with me.
So it's kind of like zoning. In some places, zoning's a cakewalk, right? No problems. In other places, oh man, it's huge battles and fees and meetings and all kinds of stuff. So it just depends on your jurisdiction. But anyhow.
So I would recommend in whatever city you're living, it's always good to find out if you need to have a city license as well for your home business. It's good to know.
I think Westminster requires it too. I'm not sure about that, but good for you, Najla, for going for the grant at Thornton. That's yay. That's great.
I still don't know how much.
Yeah. I don't know, John, we work with the City of Thornton pretty closely. We actually have folks staffing, John, the Alianza Center, which is a new business center in the City of Thornton. They're actually doing face-to-face webinars and consulting. So it's a free resource Monday. Actually, John, if you're in the city, well, it's open to anybody. Do you want to share a little bit about the Alianza Center?
Yep, it's on Thornton Parkway. I can put the address here. And just like Angela said, it's a resource for businesses, and it's free, at least until the end of the year. It's free. We have some webinars and things like this, but we also have in-person, face-to-face counseling. So you can physically visit the center. Obviously, we're doing all of the COVID precautions, so you will be required to wear a mask. They'll take your temperature when you come to the center and make you use hand sanitizer. But you could sit down with me or any of the other business counselors. It's quite lightly staffed, especially now with the red dial. It will be at 10% capacity. So I'll put the phone number and the email. I do recommend that you make an appointment rather than just go as a walk-in. Although if you show up as a walk-in, there will be somebody there from 9 to 5, Monday through Friday. But if the center happens to be full, they may make you wait a little bit. But yeah, it's a great resource. It's a really nice center. It's brand new, so everything is spick and span. It's the newest place in town, really, and it's one of the only things that's open.
Yeah. So it's a little bit after 8, so I'm gonna wrap this up and let you guys get to your dinner. Homework this between now and next week is nothing. Yay! You guys don't have homework. You get Thanksgiving. Great. But if you haven't done last week's homework or the week before, that is on your list. So play around with that revenue calculator, the spreadsheet. We'll be emailing all of that out to you. But get on Facebook if you guys have any questions. You can talk to each other over the next couple of weeks. So use that resource. Is there anything else on my team that we need to share with the group? We'll be sending out our Friday email. If there's no other questions, then you guys are awesome and have a happy Thanksgiving. Okay.
Thank you so much. Happy Thanksgiving.
Happy Thanksgiving to all of you guys. Stay safe.
Yeah.